Someone was asking about a couple of older trades I had listed on my website that produced over a 200% return on investment, and they were wondering how I did it and how long did it take. And so in this video, I'll cover those trades as well as give you a short tutorial on options trading basics. And before I cover the trades, let's get some of the basic definitions out the way. There are only two types of stock options, puts and calls, and both give you a leveraged way to invest in the stock market. The way it works is each put and call option represents or controls 100 shares of stock, and the option's price moves in unison with the stock price. However, the option contracts are way more cheaper than buying the stock. So let me show you those two trades and show you what I'm talking about. Here's a couple of option contracts I bought. BUCY September 65 put, and just for definition purposes, puts allow you to make money, or put options allow you to make money when stocks fall. And so BUCY I think was trading for around $70 back then. And so to buy 200 shares of a $70 stock, it would have cost me more than the 464 I invested right here. However, I bought two contracts, and so those two contracts allowed me to control 200 shares of stock, and it only cost me $464. And as you can see here, I invested $464. When all was said and done, I closed out the trade for $1,600, and so this produced about a 269% return on investment in roughly 7 days, and that's excluding commissions. So here's another example. Here's Apple. This is a call option, and call options allow you to make money when stocks rise in price. And so I bought two contracts of Apple July 100 call option, gave me control of 200 shares of Apple, but it only cost me $1,300. And when I closed out this trade, I closed it out for $4,400. And so this represented about a 246% return on investment in roughly 16 days. And so we'll pull up the stock chart here in a second, but just think about that. To buy 200 shares of Apple at about $100 would have cost me way more than the $1,300 I invested here. However, I still was able to participate in the upward movement of Apple, the stock, by buying these call options, and I did it for a lower price. And so that's what I mean by the leverage. So I only invested $1,300, but sometimes, depending on which option contract you buy, it can move dollar for dollar with the stock. And so if Apple moves up in price $5, now I'm making, $5 on a $1,300 investment compared to making a $5 profit on a $20,000 investment. So that's the leverage aspect and how it works. Essentially, stock options are a type of contract that grants you certain rights in regards to buying and selling stocks. Now, to help you understand this, let me relate it to a real estate contract. A real estate contract gives you the right to buy or sell a home for a set price on or before a set date. And if you decide not to buy or sell the home, then your contract is void and it essentially expires after a certain date. Now, let's pretend you found a house worth $100,000 and you were able to get a contract that allowed you to buy it for $50,000. Now, that contract gives you the right to buy something for less than it's actually worth. And it's this right that makes the contract so valuable. Now, let's relate this idea to stock options trading. If you buy or own a stock option contract, it gives you the right, but not the obligation, to buy or sell shares of a stock at a set price on or before a given date. Now, after this date, your contract expires and your option ceases to exist. Now, that's a mouthful, and it usually makes no sense to new traders. So let me go ahead and break it on down for you. Let's look at those two trades again. This one, we have the BUCY, and I bought a put option, which allows me to make money when stocks fall in price. All right. So think about the real estate contract example. Okay. I had a contract, and the way put options work, they give you the right to sell a stock at a certain date. So I bought that contract right here on 7/30, sold it here on 8/6. Okay, when I bought the contract right here, it gave me the right to sell a stock at a set price. Now the price went lower. All right, think about a house. Let's say you had a contract to sell your house for $100,000. The real estate crisis hit. Next thing you know, the house is only worth $50,000. However, you have a contract that still gives you the right to sell it for $100 in a market that it's down in. And so just think about this stock the same way. That contract gave me the right to sell this stock at a higher price than what it was currently trading at down here. And so that makes the contract more valuable, because if you owned a home that was only worth $50,000, but you had a contract that let you sell it for $100,000, you would be a very happy person. Okay, so now let's come back and look at Apple again. Okay, Apple, 426 and 611. So let me pull up that stock. Okay, with Apple, I purchased it right here and I sold it right here on this down day. And again, call options allow you to make money when stocks go up in price. And I'll compare it back to that same house example, just flip-flopped. We had a contract that says we can buy a $100,000 house for $50,000. All right. So this call option gave me the right to buy Apple at this lower price, even though Apple started trading up higher. And so that contract gave me the right to buy something for cheaper than it was actually selling. And so that makes the contract more valuable. Now, what makes stock options so special is that these contracts can be traded on the options market, just like stocks are bought and sold in the stock market. And option trading is generally riskier than most styles of trading. However, just as you saw in those two trades that produced over a 200% return on investment in a matter of days, the rewards are also greater. And that is why so many people are attracted to option trading. And if you'd like to learn more about it, you can go through our free course on our website. Or if you like more video training, you can let us know by subscribing to our YouTube channel or just clicking on the link below this video. So you take care, and I'll talk to you soon.